Hi, everyone, and welcome to Steve Cooper's podcast for aspiring real estate investors. In each episode, I try to connect with seasoned investors or industry subject matter experts, and they're willing to share their tips and tricks and lessons learned with us all. So, before I forget, though, what I want to make sure you do is hit that like button. Make sure you share this video if you get a chance with any friends, and please subscribe if you haven't done so already. Anyhow, back to my guest. My guest today is a co-founder, spreadsheet creator, and number cruncher in chief for Kivera. She's a real estate investor. She was investing internationally before embracing Canada at home. She has a PhD, 15 years as a risk management and mitigation in the regulatory science field. I'll get you to explain that better. You focus, I believe, on buy and hold and value adds, and I think that I'm going to let you say the rest. Ladies and gentlemen, my guest today, Jasmine Bhathena. So happy to have you on Steve Cooper's podcast.
Thank you very much, Steve, for having me. It's an honor and a pleasure to be here. Yes, so we've been investing in real estate for a bit. My husband and I actually do this as a team. Unfortunately, he couldn't be here today, but I'm really, really glad that we're having this opportunity to chat and get to know each other better.
Uh, well, I'm really glad you're here. Did I get everything correct when I introduced you?
I think so, yes.
Very good.
So yeah, I can give a quick brief. I actually got into real estate investing because my dad's been a real estate investor most of his life, and I've seen how that has helped him sort of, get retirement exactly when he wanted to. And after he's retired, he's sort of living off the returns from his portfolio. And I'm like, oh, that's a really cool thing, and maybe I should learn. So we did. We got a lot of education in the field and started investing in real estate in the Ottawa Valley area, somewhere around 2019, just before COVID hit. We got into it, bought a property, and we were so excited because we were like, yes, now we're investors. And then COVID came around and everything, hit the fan. But it was interesting and a really great learning experience. And we liked it enough that we went out the next year and got another property and then did the same a year later. So three properties in 3 years, and we were like, okay, this is really fun. Let's do more. So then we went out, got more education, got really deep into everything. And by that time, we realized that Ontario's market was going to the moon, literally. And it was getting very difficult to get good deals because everything was in the multiple bid situation, prices were sky high. So we started looking west and hit upon Edmonton, which was just there, but not quite where it is right now today. So we went over there. We got into a joint venture there with a couple of folks we know, and we ended up buying a whole bunch of townhomes, duplexes there. We got a bunch of duplex, semi-detached properties, and we got a pretty substantial portfolio out in Edmonton. Now we're sort of refocusing a little bit on the Ottawa area, just given where Edmonton is right now. It's poised to boom, but I think we got in at a good time. So yeah, looking at other opportunities all the time. And like you mentioned, we generally do a whole bunch of buy and holds. We've done some new builds. And we're looking to, get our feet wet in the value add space beyond what we've already done, which was on a single family home. So yeah.
That sounds perfect. It must have been quite a challenge as COVID hit, and all of a sudden you had to second guess things, but you sure powered through it, and look at how you've grown. That's amazing.
Yeah, and it's all thanks to our mentors who were, there to hold our hand and take us through everything. This is normal. This happens. We're like, okay.
Happens. So let's think about this a bit. So as you started thinking about investing out of province, you've got a whole new spectrum of things you need to consider, right? Where the townhouse that you originally bought might be driving different distance away. Now you've got something several provinces away. You're needing to have a team in place that looks after this for you, I'm assuming. But prior to that, you needed to figure out, where do I want to invest if not Ottawa? What kind of analysis or thought process did you put in place to choose Edmonton? Was it somebody's recommendation, or were you actually analyzing markets across the country and trying to find the right place?
When we started investing in Ottawa, it was really a spur of the moment thing. We had a realtor we had previously worked with to buy our primary residence at the time. And a couple of our friends had also used him. He seemed very knowledgeable and he's one of the better known sort of persons who help others sort of build their portfolio in the Ottawa region. So we essentially went to him and said, we want to invest. Could you suggest something? And I think our thought process at the time was, well, right now it's here, it's tangible, we can touch it, drive by it whenever we want. But it's also close enough that as we're learning the process and dealing with tenants and property management and putting things in place, we get to learn because it's so local to us, right? Like we get to hear from the trades, we get to build our team in Ottawa and get these going. That was really the extent of the analysis then, but we did do a little bit of market research in that at the time we found out that Ottawa was like a really, stable, steady sort of a market, no crazy peaks, no crazy troughs. And that was a bit reassuring. We went back about, I think, to the 1950s in terms of looking at the house price index in Ottawa. And other than two or three times where the drop was a little significant, it's been a very steady market. It's always up and to the right kind of thing. So we were pretty confident because it's a federal government town. It has a lot of industry. It has a lot of, it's the Silicon Valley of Canada. So we were very confident in proceeding with the process here. When we decided to move provinces, however, that's where the real research kind of kicked in. And thanks to all the education we got, we went down and drilled into province level. We went down to the city level. Then we looked into the neighborhoods, the areas, started to look at things like rental incomes, started to look at what the household incomes were, all the good stuff you need to look at to really drill down. And we actually were sort of tossing up Calgary, Edmonton, and then we sort of landed in Edmonton because we just felt, again, being a provincial government town, it was perhaps a bit more stable and a bit more diversified than Calgary, which was a bit of a boom and bust. The other advantage to Edmonton, we found that it's usually about 18 to 20 months behind the market in Calgary. So we were like, okay, we have the canary in the coal mine, if something
Right.
happens. So let's look at Calgary, but we'll invest in Edmonton. So that's sort of it. But yeah, there was a lot of research that went into it. We looked at a whole bunch of other cities as well across Canada, even some in the States. But we wanted to maybe just take that step because Edmonton was just so accessible at the time.
Yeah. 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 Nice. I and you mentioned the States. Have you considered, are all your investments in Canada? I think I read somewhere they are.
At
And
this point, yes.
and are you maintaining that Canadian portfolio deliberately, or is it just fallen into your lap? Are you thinking that there might be a little bit too much risk associated with investing across the borders right now, or is it something that's just...
Yeah, so when I did start looking into going cross-border investing about a year ago, I was pretty gung-ho. But some of the uncertainties that have come to the fore recently have sort of stayed my hand. I'm in wait and watch mode about cross-border investing. I'm not looking to jump into anything right now. Yeah, that's where it's kind of at this point. I'm personally a very risk averse person. Like I like all my T's crossed and I's dotted. And if I see turbulence or something, I get into risk mitigation mode, but there are chances that I don't want to go down that path too fast. So I'll take my sweet time and monitor. And that just comes from personally who I am as a person. It also comes from my training. I've been working in risk management for the longest time. So for me, it's just an inbuilt thing. Like look at the risk first, try and mitigate it. If it's out of my control to mitigate, I'm probably gonna just step back a little bit and see
So
what happens.
you've got a fairly sophisticated risk management approach, I'm sure, measuring probability, likelihood, scoring it to the whole 9 yards.
Yes.
Do you apply that to that same criteria or same pro process to real estate that you were using in the science field?
For most part, yes. I'm very proud of my Excel sheets and I really, really love them. I have an Excel sheet for everything in this world,
Excellent.
including my grocery list. So I like Excel very much. I'm always plugging at numbers and I just like quantifying things, right? So it just works out very naturally. But yeah, for most part, I mean, in the science field, it's a little different. I work with the human body and I work with drugs and things like that. But you know, if you won't do something right, you're going to end up killing a person. So that's a pretty heavy cross to bear if it happens. So you're always ultra cautious. I try to bring that into the real estate field as well, but I realize that sometimes, you know, fortune favors the bold. So you sometimes have to push through that layback and maybe this is not quite right yet. And sometimes I give it a little more leeway than I would in my day job.
It's interesting because I too, I'm a PMP, so I have formal risk management training as well. I understand the process. I'm in the aviation field, so we perform a lot of rigor for aviation safety and also from a business perspective
Mhm.
to make sure that the decisions we're making are not going to have adverse cost and or schedule impact to what we're doing. I find that with such analysis, I can almost find risks with anything that will talk me out of buying something. It's hard. It's important to dial it back, like you're saying. Otherwise, you can set yourself up for, I think, a bit more than you want, more than you bargained for in the way of costs.
Yeah, absolutely. I mean, being in the risk field, you probably know, right? Risk is a function of exposure and hazard, right? So if you can quantify what the hazard is and then the likelihood of it happening, you can sort of stratify the risk. And that's the approach I generally use in real estate as well. You know, is the interest rate going to go up and down? Sure, the probability of that happening is fairly 50-50-ish, right? It could go up, it could go down, but it's going to change at some point.
Going to change.
It's
Hopefully
absolutely going
soon.
to happen. Well, if it happens, is the impact on my project going to be not so great, catastrophic? Is it going to be good for me if it goes down? And then I sort of give it a quantification, give it a number score, and leave it there. But then
Yeah.
I look at things like, oh, you know, is an avalanche going to take my property away in the next 5 years? You know, quantify that. Don't lose too much sleep about it. The probability of that happening in Ottawa is somewhat low. So stuff like that, right? Like you assign a number, you put the probability factors together, put your uncertainties together, give the uncertainty factor, and then just, you know, try and make a comprehensive matrix everywhere from green to yellow to red with all the risks that keep you up at night, essentially.
And there you are. And once it's on paper and you've done due diligence, then that allows you to sleep.
Yeah, exactly. Because if something bad happens, heck, I've already thought about it. I know how to deal with it.
Yeah,
I'm not scrambling when it happens, right? I'm not digging the well when the fire started.
perfect. I love it. So what do you think is the next target? Are you still buying? Are you looking to stay in the townhouse asset class, or are you thinking of multifamily growing into some larger buildings? What do you think in the future looks like?
So I think at this point we are sort of slightly pivoting to smaller multifamilies. And when I say small, I'm like looking at 15 units, thereabouts.
Yeah.
And that's because I think I've learned all I could in the single family townhome sphere. The properties we have in Edmonton are mostly duplexes, and we're just like, okay, it's time, we expanded a little bit and scaled up a little bit. But I'm not looking at this very moment to like, jump into 100 units right away because I think there's a step in between that I need to take first. So at this point, we're looking at multifamily in the smallish range, 15 to 20 units. We're looking to do some value add pieces. We're looking at some new builds. We're looking at repositioning assets as best we can. And at this point, we're sort of re-looking into the Ontario market, given that it's been about a year and a little bit now that it's been through its correction phase. I think that there's opportunity that's coming along. Plus, with a lot of uncertainty across Canada and across the world with all the world events that are happening, it just looks like areas with stability are probably a bit safer than the others. So we're actively looking in Ottawa again, and we're actively looking in areas where there is a strong and steady base population.
I love it. Well, you know what? I mean, this is it. We establish a comfort level, and then we say, okay, now I need a bit more. I need to actually test myself and push myself.
Yeah, maybe stretch my wings a little.
Yeah, no, that's great. That's great. So, are you actually managing this then as the active partners? Are you investing in lending as well as the active side? Which
Yes, so we're doing it as a bit of a 360. We're doing some active stuff. We're also investing passively in other projects. And we're also doing private lending because for now our strategy is mostly very vanilla, long-term buy and holds. The idea is to build generational wealth, and the idea is to hopefully give our kids a leg up when they need it later on. So the buy and holds are really great for that, but they're a little tight on the liquidity portion of things, which is where our private lending piece comes in because that helps us with the liquidity that we might need, not just for active projects, but also for investing in other passive projects. So we do active investing, we invest in other people's projects as passive investors and do private lending. So yeah.
Right. So, I mean, there have been some interesting times for in the private lending sphere in the last few years. I can only imagine the spreadsheet that you've created to go through all of the risk analysis for investing in other people's properties. Tell me a little bit about what you're looking for in something you're investing.
So I actually have an Excel sheet, surprise, that puts the LP or the passive investor lens on. So I have my underwriting spreadsheets, which are really in depth and which are really like structured to look at it from a active investor perspective. But I've got a real small one-pager Excel sheet that I look at when you're investing as an LP. And then I plug the numbers in, and then right off the bat, I have a certain criteria level that cuts things off. So whether I'm looking at the IRR or the total return on cash, those are numbers I kind of use to screen a lot of the passive opportunities that come along as well. On the private lending side, it's more along, like I have a very short list of criteria. I don't go above an 80% LTV. I don't invest in secondary markets. And I want to always make sure that there is a secured piece of lending that's attached to it, preferably a first mortgage, but if not, a second with more than 25% LTV to the seat. So I don't deviate from that. If that's my criteria, that's what goes into the private lending. And I think, knock on wood, so far it's been fairly successful in that I haven't had troubles with the private lending market. So as long as I stick to my criteria, either screening as an LP or screening a private lend, I'm okay. I don't get adventurous in those areas.
I gotta warn you, I'm a spreadsheet nerd, so I would love to see those at some point in time.
Yeah, absolutely. Absolutely. I can definitely share that with you for
I,
sure.
I think it's really helpful to be able to put things in black and white and be able to have and take the passion out of it and use logic and reason as you're assessing things.
Yeah, I mean, sometimes the passion is really good, and that's where my husband comes in. He's a bit more of a risk taker.
There you go.
He's from a business entrepreneurial sort of background, and he's like, yeah, let's do this. So we complement each other very well because I'm sort of the anchor wing in the down, and he's my wings, and we try and reach a balance that's satisfactory to the both of us. And I think that takes a lot of the emotion out of it as well, because sometimes I personally just get really analytical and I'm like, no, if it's 19.99 and it's not crossing the 20 threshold, we're not doing it. And he's like, look at the big picture, right? So I think that really helps. We're two personalities who are aligned in our goals, but have a very different way of approaching things. So I think that's useful because with numbers sometimes, and I'm sure you've done that, when you get into spreadsheets, you end up with tunnel vision, right? Like you just see what's in front of you. And sometimes you just need to take that step back. So I have my husband to do that for me.
I put a lot of detail and underpinning kind of calculations together and look out 10 years to try and figure out what the future looks like. And I believe that the term I've heard is analysis paralysis. Find
Exactly.
myself looking at things through far too deeply, and there's a point where you really do need to act. Take
Hmm.
it, make the most out of it. Say, is this a good deal for me or not? Based on those criteria, as opposed to trying to complete all of these analysis and say, what does it look like 20 years down the road?
Yep, exactly.
Cool. So you're also obviously in the game of raising capital. As an active investor, you're looking to others to join venture with you. Is that right?
That's right. Although to be very, very honest, I would say 90% of all our investments so far have been self-funded.
Mhm.
But we have sort of reached that wall where we can't self-fund any longer. So yes, we are kind of getting into the capital raising game. At this point, we've successfully raised at least six figures on a couple of projects. So we're happy about that. But yes, we're always looking to grow with other people. And what's really important is that we're very much on the same page when it comes to investors in terms of their needs and wants. Because as we've said, we are generally looking for long-term buy and holds. We're generally looking to have those generational wealth developing kind of projects. So those are the kind of people that we generally like to work with. And we've been lucky enough in that our group in Edmonton has been super, super good for that. And yeah, it's been going pretty well.
I love to hear it. I really do. Um, One of the questions I like to ask everybody, and you've probably answered a good part of it already, but I like to understand what is motivating people. What is your why? What does the vision of the future look like, and how are you going to know when you've succeeded in getting what you're trying to do?
Um, so there's some very high level whys, and I've mentioned a couple of those. Basically, it's to, leave a legacy to my kids, give them a heads up or a leg up, whatever they need when they're older and starting out in life. One of the first reasons we actually got into our first property was that we'd have something outside of their RESPs to help fund their education with.
Yeah.
And we were like, okay, if we do it now when they're like 4 years old, by the time they get to university or whatever they want to do, we'll probably have a little piggy bank that we can draw on to help them out over and above what the RESPs can give us. So we did that, and those are sort of the higher level powerful whys, right? But deep down, there's a core why that lets us do this. And I think a great extent that one is that we want to have some control in our lives. I know a lot of people call it freedom. I don't know if you're really ever free, but a bit of control over my time. If I can wake up tomorrow and not owe my time to anyone else, that would be awesome.
I love that. So, building this legacy for your children, are they actively involved now? Are they working the business? Are they learning the ropes?
My son he's very interested and he's already made up his mind that whatever he chooses to go to university, he's going to buy a townhome or whatever with our help, and he's going to landlord it himself. He's going to rent out the rooms to fellow students and, figure out what it's all about. I think that's a great opportunity for him to get involved. So we talk about it fairly often. He is really good with numbers, so he sits down with me and sort of looks over my spreadsheets, especially for underwriting my projects, and he's learning a lot about that. He's pretty interested. My second child, unfortunately, is perhaps not as enamored of real estate as of yet. But she's got a way to go, so hopefully she'll see some of the advantages that come her way. In fact, one of the very, very tangible results that she was able to see is that just this past summer, we refinanced one of our properties here in Ottawa, and we were able to pull a little bit out and take a trip to Mauritius in the summer. And we were able to do it really fancy.
Yeah.
And the kids were like, well, where did all this money come from? And we're like, well, this is what real estate's for. You take a refi, invest some of it, and then there's some play money. So this is play money, right? And I think I could just see like bulbs go off in their heads, and they were just like, okay, I know what you're talking about now. So I think giving them those experiences and showing them where the funds for that comes from is going to go a long way. And my son already knows that, some of the amounts coming from refis, et cetera, as they come up, are going to pay for his tuition at university as well. So I think there's some appreciation of what starting early can do for you.
Now, I know that Mauritius is a little island, and I think it's off the coast of India. Is that right?
It's south of India, but it's kind of very close to Madagascar, so it's
Madagascar.
more,
Okay.
yeah. So it's in the southern hemisphere, but closer to Madagascar. It's about a 7 hour flight from India, I think. It's about an hour and a half or two from Madagascar. Yeah.
That sounds like quite the trip.
It was insane. And we actually transitioned through, I transited to France. So we spent a couple of days in Paris as well. And it was awesome because it was the Olympics. So when going in, it was the starting ceremony of the Olympics. And when we came out, it was the closing ceremony. We didn't end up making the closing ceremony because it was just insanely busy. And we were just like, we have to catch a flight first thing in the morning. We're not going to be able to do this. But I think the excitement of the Olympics was everywhere. So it's a really, really fantastic experience.
What a great thing for kids to experience.
Yeah,
I'm thinking that travel opens our eyes to so much, right? And
absolutely.
I love being able to take our son and travel with him and see what we can't expose him to. So his eyes open up, he gets to realize more than downtown Abbotsford. He's able to see the world, right? So I love this.
Absolutely.
So, Jasmine, if people want to find you, want to reach out and say hello or learn more about spreadsheets or investing in Kavera, how do they reach you?
So we have our website, which is www.quvera.ca. And the best way to connect with me or my husband Harish is on Facebook or Instagram. Just look for Jasmine Bhathena, and yeah, you'll find me right there.
I'm going to remind everybody once again, please make sure you hit the like button, the subscribe button, and share this with your friends. Jasmine, what a pleasure having you on Steve Cooper's podcast. I'm so happy that I reached out to you and you said yes. Thank you so
Well, thank
much.
you so much for having me. It's been fantastic getting to know you over time. And yeah, thank you very much for having me today.
Thank you so much. All righty, bye-bye, folks.